Nigeria's foreign exchange market turnover fell by 32.28% in December 2024 to $9.74 billion from $14.39 billion in November, according to the FMDQ Exchange. The decline, driven by ongoing FX reforms and liquidity constraints, led to reduced trading activity. Despite this, the naira appreciated by 6.55% to an average of 1,564 naira 97 kobo per dollar, though volatility increased. Overall, Nigeria's financial market saw a 29.58% drop in spot market turnover. And meanwhile, the Central Bank of Nigeria introduced an electronic FX machine system to enhance transparency, reduce speculation, and ensure a market-driven exchange rate. This morning, I'm joined by Oladipo Ajayi, head of fixed income and FX, Chapel Hill Denham Securities Limited, to talk about this. Thank you so much, Mr. Oladipo Ajayi, for joining us.
Good morning. Thank you very much, Nico, for having me on this morning.
You're welcome. Now, the report cited ongoing FX reforms and liquidity constraints as factors that contributed to FX turnover decline. Help us understand what role they actually played.
Well, I think I will agree with the fact that it's more like FX reform, but liquidity constraint, I won't actually accept that as one of the reasons why we saw that drop. I think one of the reasons why we saw the drop was the FX reform, and coupled with the fact that what the FX reform brought to the table is it actually went out demands that are not actually genuine. And also another thing also that we also need to actually realize is that there are some future maturities, FX obligations that a lot of people are bringing to the spot market. So it simply means that I have an obligation maybe in the next 12 months. But because of the panic in the market, so I don't have an idea of where naira will be trading in 12 months. So I would rather now buy the dollar and hold now, rather than wait till that 12 months. And this is actually happening to most of these manufacturing firms. They have open bills that maybe should crystallize maybe like 6 months. But because of the fact that they are seeing the volatility in the market, a lot of them are rolling it into the spot market because of the volatility that we're seeing. But what the B-match system brought to the book is the transparency of the market. It also showed the liquidity of the market. So when people now start seeing the stability in the market, a lot of people now actually have to pull out what's supposed to be their spot order, but that is meant for future obligations out of the spot market. And that's one of the reasons why we saw that drop. So it's not about the fact that there was no liquidity in the market. That's what led to the drop in activity in December. I would rather say it's because the central bank has been able to remove speculative demand from the market. So we can now see what are the real demands in the market. And that's exactly what happened in the month of December.
With you saying this, some people would say or would have said that, the reforms should have instead boosted liquidity in the market rather than derail it. I understand your standpoint, but one would wonder if the challenges are overwhelming.
So what happened is the reform actually boosted liquidity, to be realistic. And like I said, what we saw in the market was a function of the demand that actually came to the market in December. It's not that there was a heavy level of demand that were not filled in the month of December. And if you look at what happened in the BMAT market very well over that period, you will see critically that for major part of the month, the supply in the market is even more than the demand. There are times that you see supply as much as $75 million, and the total demand in the market is about $30 million. So what that for me shows that it's not about the fact that the market is not liquid or there's not enough liquidity in the market. I would rather say that what happened at that particular point in time is that we are not seeing the real demand coming to the market. Not much of the demand is coming to the market because people are now seeing clarity that, it seems that naira is finding instability. So why do I need to actually buy at this point when I have the view that we may actually see better days ahead? So, and I think that's one of the things that actually happened in December. And even in December, we can see critically that most times when there's dearth of liquidity, the central bank comes to the market to actually fill that role. And don't also forget that the central bank has mentioned time with that number that we are currently operating more like a managed floating system. So it means that when there's depth of FX liquidity, the central bank will come to the market and actually fill that vacuum. Before now, we used to have the W DAS, we have out DAS. Sometimes we have, at the time we were having the SMIS window, where the central bank used the opportunity to meet the demand of the market. But in a situation whereby the market has now decentralized, so it means that all market has been actually be pulled together as one market. So what the central bank now do is that the central bank comes to the market to actually intervene when there's dearth of supply in the market. And I think that that's exactly what happened in the month of December. When the central bank noticed that they are not seeing much influence in the market, central bank comes to the market and actually supply to the market. So major part of the month of December, I see more supply than demand in the market.
Well, despite the high demands and the drop in FX turnover, the naira did appreciate. You said that in situations like this, the CBN usually come in to intervene. And I'd like to ask if it has to do with the speculations around the CBN using part of the reserves to defend the naira, or are there other key drivers that are said to be behind this currency strength?
So let me make some clarification around this. The role of central bank is to stabilize the currency. That's their core function, the stability of the currency. And the reserve is not for decoration, but to actually help to actually meet FX obligations in the market. So the central bank sometimes come to the market to actually supply to the market when they notice that there's not enough supply in the market, and they will come in and supply. And at times, what the central bank will do sometimes is to actually float OMO bills. And when the central bank comes to market with OMO bill, what happens is that foreign investors will show interest. And when foreign investors show interest, it means that they need to inflow FX to actually be able to, so as to be able to participate in the auction. And when they are inflowing FX, they need to sell through the B-match market. And sometimes this is a form of liquidity that comes to the market also to actually cushion the effect of the dearth of FX supply in the market. So the central bank has been doing what needs to be done, because that is exactly what their role is to actually ensure that the market is stable. And at times when the central bank notices that it seems that naira is actually appreciating maybe aggressively, they could also come to the market to come and buy dollar. If they notice that maybe naira is appreciating too aggressively, and they need to actually caution that so that it won't fuel another level of speculative activity on the currency. So they may actually come to the market and also buy dollars from the market, so actually ensure that the market is stable. And that's what the central bank has been doing since the introduction of the B-match window since the beginning of the month of December.
So let's talk about speculative trading and how that is also affecting volatility. And of course, if the CBN has been up and doing in terms of dealing with that too.
Well, for speculative activity, I think the only way I can explain that is that you would have seen that the volume of trade in the window has actually dropped. So what that means is that the speculative demand has actually left the market for now. And another thing also that can also tell you that the central bank is winning the battle is that when you look at the differential between what is happening at the official window and the way naira is trading at the parallel market also, that can also help to actually explain what is how much level of speculative activity that's still happening in the market. So when you see that the spread has thinned out, so it's telling you that central bank has actually won. Is actually winning in the battle around that, and based on what's currently on ground, it shows that central bank is winning the battle in that regard. And one of the ways I feel that they have been able to do that is the extension of the weekly $25,000 sale to BDC, and what that has done to the market is that helped to actually cushion the effect of the activity in that segment of the market. So it simply means that people that want to actually travel can actually buy FX from BDC, and also people that actually want to pay school fees and also go on medical tourism can also get their demand filled in that window through the BDC line. And also the central bank also mandated that BDC should now start stamping passports of people that are actually buying FX to them. And when I mean FX, I mean PTA. through them. So, and I think these are some of the controls that they are putting in place to actually help stabilize the market. And for me, when I look at this all together, it seems that the central bank, one way or the other, have been able to actually narrow the gap, which means that the level of speculative activity in the markets has actually thinned out.
Okay, so what does the decline in FX market turnover now mean for businesses and investors in Nigeria?
So when you look at decline in FX activity, and sincerely speaking, it depends on the angle you are looking at it from. And based on my perspective, it's the fact that for now, the central bank has been able to remove ingenuine demand from the market. So the real market that we are seeing is more like the real demand in the market. And as a result of that, it tells you that because currently now, demands are being filled on a daily basis in the B-match window. It's a willing buyer, willing seller market. It's also a market where it is the identity of participants in the market is actually protected. So you don't even know who you are actually trading with in the market in the first instance, and that has helped to actually protect the credibility of the market to a great extent. So for me, to participate or people who are actually looking at actually meeting demand in the market, it means that the market is open for everyone. And also the level of activity or the volume that has dropped is not a function of the fact that the CBN is not meeting the demand. It's a function of demand that the demand into the market has actually dropped as a result of the reform that central bank has put in place. Because there are a lot of metrics that you need to meet before you can actually participate in some of these obligations, in the market, and this is exactly what has actually thrown out most of this ingenuine demand from the market.
Permit me to just quickly track back a bit. Just as the Nigerian government pointed out, accusing fingers at the BDCs, would you also say that the crypto market also contributed to the volatility that we saw, and probably they're part of the speculative traders?
Yeah, now so that's fine, because we should understand critically that when you are talking about speculative activity, you see that most in the FX market. And also when you see what's happening in the capital market as well, what's happening in capital market is more like it's a fundamental trading. Because what you see in the capital market is backed based on assets. So it's based on valuation. So it means that it's either you are investing in treasury bills, and when you are investing in treasury bills, you are either investing in the short-dated instrument. So, or you are investing in the bond market. And when you look at the trajectory of what is happening in the market currently now, it's more of high yield environment. So everybody is coming to the market to actually take advantage of high yield environment that we are currently seeing in the markets currently. And that's one of the reasons why you have seen that aggressive influx of activity into that segment of the market. And also when you look at the equity markets, Nigeria market is one of the best markets in African space last year. Nigeria market gained over 35% last year. And also it's a function of the level of interest in the market. And when you look at valuation of most stocks in the Nigerian market last year, they are more like at low base. When you look at the banking stocks last year, you will notice that compared to their peer, they are trading at a very low price to book ratio. And also another thing also is the consumer names as well. With the stability of FX towards the end of the year last year, we also saw a level of activity or interest in most of these companies. And don't also forget that most like Nigerian bureaus, international bureaus last year, they were in the market for right issue. And we saw every influx of FX from their parent company to actually take on their rights in the market last year. So some of these things, activities are some of the things that we saw in the market last year that also led to that huge level of activity from the capital market space.
So we're seeing more players from different sectors and subsectors come into the field. So let's look at the electronic foreign exchange machine system now. Let's understand how effective it can be in enhancing transparency and, of course, reducing market distortions.
Yeah, when you look at this thing, it's not that this thing is not only introduced in Nigeria. We have seen it operated in Kenya. It was used in Kenya last year. It was introduced in Kenya January last year. And when you look back, you will notice that Kenya has the best currency performance last year. The same B-match was introduced in Zimbabwe as well. Nigeria should be more like the third country to actually implement that in Africa last year. And since the introduction of this, what we have seen is that we have seen more like transparency in the market. So at a glance, you can see the total demand in the market and you can see the total supply in the market. And also at the same time, it tells you the depth of the market. So for me, I think the D-match to a great extent is more like the turnaround policy that we have been waiting for. And it's just so sad that he actually came that late to the market. Because when you see since the introduction of this, we have seen instability in the market. And I think that is something that is here to stay. What the central bank just needs to do over time to ensure that they actually have oversight of the market, just like I mentioned earlier on. And don't also forget that aside the fact that people need to trade on that system, there's still also a lot of reporting that you also need to do. Don't forget that the central bank also introduced the FS code, where you need to make a report. And what the central bank has done also is to ensure that this report is signed by the board of directors of banks and also the financial institution that actually participating in this window. So what this means is that anybody that is found wanting will be sanctioned by the central bank, and nobody wants to actually found themselves in the black book of the central bank. So if you look at all these things summed together, I think it's a very good one, and I think it has come to actually reshape our FX market.
And what's in it for fixed incomes and money markets? I know you mentioned it in passing, but then I'd like to understand what response they will be having to these shifts that we're seeing in the market.
So for fixed income and market, what the benefit for this is that it means that there's a window where foreign investors can go to and sell FX so that they'll be able to participate in auctions. There are times, if you noticed last week, the central bank actually announced OMO auction. But what they did was they gave more like a 24-hour timeline. And when you see that, it means that the central bank is also giving room for foreign investors to also participate in that auction. And what that will mean is that the foreign investor can come to the market and come and sell FX so as to convert that to naira and be able to participate in that window. So what this big match platform has done is also to actually help the inflow of foreign investors into our market to also be able to participate in the market. We've seen most of these foreign investors also coming into the bond space to actually buy bond long-dated instruments, maybe like a 10-year bond, like a 7-year bond in the market. And don't also forget that most of these guys too, they are still at the doorstep waiting also to continue to come into their market. So the introduction of this big match has also helped the level of transactions that we are seeing in the fixed income market space as well.
All right. So what will do external factors? We've seen how good it seems or it might be within the domestic field, but then let's look at the external factors like global economic trends. What do you think these might actually play in shaping our FX market performance?
So what the global economic trend will do is that it could actually stop most of these guys from aggressively coming into our markets. When there's change in the global economic situation, that is maybe that actually maybe at the point where the global economy is becoming a bit edgy. So it means that a lot of people will actually fly into safe haven, and most of where you see them actually move their instruments to move into a dollar-denominated asset or move into commodities like gold. So when situations like that happen, what we'll see more like a capital reversal. So you start seeing most of these foreign guys actually dumping their assets in Nigeria and converting back to dollar for movement out of the country. So at that particular point in time, the onus now fall on the central bank to actually rise up to that challenges, because you don't want to get to a situation whereby most of these foreign guys are now finding it very difficult to actually outflow their funds. Because when you get to that level, it will actually put a lot of pressure on your currency. And that's, like I mentioned earlier on, that's one of the reasons why you have the external reserve to actually cushion the effect of this in such a time like that. So at that particular point in time, what we will see in the results that we will likely see a result that will actually dwindle at that particular point in time so as to meet some of these FX obligations. So that's exactly what will happen when you see a trend like that changed.
And you think whatever it is that the CBN will be doing will be able to protect or insulate Nigeria from this new regime that we're seeing play out in the West with the sanctions and the cut of aids and the tariff increase that we're seeing now coming from USA?
So like I said, it is the function of the central bank to ensure the stability of the currency. And if you remember, since the emergence of this new CBN administration, they've been more like focused on actually finding a way to actually keep the currency stable. And like you said, we are not totally insulated from a situation like that. And that's why I mentioned earlier on that when we see more a situation where we start seeing more like capital reversal, what will happen is that we'll see a lot of pressure on our reserve. And when you see pressure on your reserve, you will affect your currency as well. So what the central bank will need to do at that particular point in time is to actually meet the demand. Because when you don't meet the demand, you will create that huge volatility. But when the central bank actually meets the demand of most of these foreign guys where they are living, what it will do is that it will lead to a naira actually depreciating, but it won't lead to a level where it will create a lot of volatility in the market. Imagine most of these foreign guys trying to live and there's no liquidity to actually meet their demand. At that particular point in time, they were ready to live at any rate. So it simply means that they don't even mind actually living at 2,000 to a dollar at that particular point in time. But if the central bank actually meet their demand when they actually need the investment, maybe at 1,500, 1,550, there won't be no reason for you to actually wait until when you have created that sentiment for volatility in the market before actually meeting demand. And that's one of the reasons why I said that it's the compulsion of the central bank to actually meet some of these obligations when there's more like capital reversal needs for most of these foreign investors in the market.
Well, Oladipo, you know that meeting these demands will actually mean that the CBN will be exhausting its own reserves, of course, so to speak. So then I just want to quickly chip this in. How is the export market looking for Nigeria aside from having to raise bonds to meet liquidity?
Well, for export market, if you have seen that currently, based on the report from the government is currently saying that they are currently meeting the quota allocated to Nigeria by OPEC. That means we are currently producing the 1.5 million barrel per day quota that we are giving, that we are allocated by OPEC. And that is excluding the condensate. So with the condensate, the report says that we are doing close to about 1.75 million barrels per day. So for me, when you look at it from that perspective, I think that we are not doing that bad because when you look at where we're coming from, later at the point in time, we are doing about 900,000 barrels per day. We are not even anywhere close to our daily quota. But if we are currently doing about 1.75 million barrels per day, including the condensate, it means that what that would translate to is the capacity to generate more FX. So it simply means that we are currently generating a better FX revenue than where we used to be. But my concern is that the likely change in that environment because of what is the focus of the new government in the United States. The new government in the United States is ready to actually continue to drill oil so as to actually crash price in the oil markets. And what that will also mean to us is that it will actually create a bit of panic in that segment of the market, and that will actually drop the price of oil in the global market, and that will, at the end of the day, impact our total revenue generating capacity. So as we speak currently, we are currently in line, but I just feel that the government needs to find a way to continue to actually diversify the economy. Sometimes last week, a report published by NEPC's Nigeria Export Promotion Council stated that we increased our production, our export last year by close to about 30%, and that would sound very great, but I think we can also do better. And like I mentioned on one of your programs last week, that the government needs to actually fine-tune what is happening at the port, so as to ensure that quick passage of product out of the country to destinations, because that has been one of the problem, or more like the bottleneck that most of these people actually participating in that segment of market facing. So the government needs to actually find a way to actually create more like a easy passing where products can actually leave on time and get to destination on time. That will also help our FX generating capacity as well, and also help to actually diversify what is currently happening in the oil and gas sector.
Of course, but I'm sure that business owners and policymakers were hoping that the CBN reforms will be able to score a big win for the FX market. That will look good for everybody. So we hope that that would come into place in time. Oladipo Ajayi, head of fixed income and FX, Chapel Hill Denham Securities Limited. Thank you so much for sharing your thoughts with us on the show.
You're welcome. Thank you very much for having me on, Nathan.
Yeah, you're welcome.